All right, rule 7, always reinvest those dividends. Again, going back to earlier on in this class, we took a look at that Johnson and Johnson example. The higher dividend payouts in year 2 were a direct result of taking the dividends paid in year 1 and reinvesting them to buy those additional 7 shares. We took our position from 200 shares to 207 shares over the course of a year, and for year 2 we now have 207 shares paying dividends rather than the original 200. So when you're thinking again, going back to rule 1, thinking about it in a very long-term perspective, in year 2 we're able to accumulate another 10 to 12 shares, and that allows us to go into year 3 with even higher dividend payments, and this is all excluding the capital appreciation from the underlying stock. So when you're looking at this, always, always, always reinvest dividends. That is one of the core tenets of dividend growth investing. As the dividends grow, you should reinvest them into, even if it's not the same company, uh, that remaining account balance that you receive when the company pays out dividends, it'll just show up in your account. Make sure you put that into buying additional shares of any company, any dividend paying company that fits your rules and into your criteria when selecting a stock to invest in. The other option is a DRIP program. It's called Dividend Reinvestment Plan. You should definitely look into it if you plan on implementing this strategy. Essentially, what it does is the brokerage firm, when they receive the dividends from one of your holdings, they'll actually automatically reinvest it for you. So even if you don't log in for say 2 or 3 months, any dividend payments that are paid out during that time frame will automatically be reinvested into buying additional fractional shares of your holding. So it's a great, it's a great way to just manage your account without actually having to manage it. Me personally, sometimes I don't check my account the entire month until when I'm actually trying to make a purchase, and any dividends paid out during that, I'll get some notifications, and it's really nice to see that I can walk away from it for a long period of time and not have to constantly be worried about where my money's at.